Bitcoin is down over 50% year to date and about 70% from its all-time high. An opportune time to introduce the first short Bitcoin-linked ETF. The ProShares short Bitcoin strategy launches today on the New York Stock Exchange under the ticker BITI. Joining us now to discuss is Simeon Hyman. He's an investment strategist at ProShares Global. Hello there, Simeon. Thank you so much for joining us.
Thanks for having me.
All right, so the ProShares short Bitcoin strategy, is it an opportune time to release this, or maybe too late, because now we're seeing Bitcoin, as I mentioned before, down 70% from all-time highs?
Well, I think anybody looking at this for some sort of timing indicator shouldn't be looking here. So, our intent is to offer solutions to investors. We launched BITO, the first long Bitcoin-linked ETF in the fall, and we just wanted to also be able to offer the short side for hedging purposes and whatever anybody would want to use it for as soon as we could, but it really has nothing to do with timing and everything to do about a valuable solution. It's really hard to short Bitcoin. Even if you can do it, the borrowing cost can be, upwards into the high teens. So offering this as an opportunity for regular retail folks to, have a short link position in an ETF in the futures market, nice and regulated, 40 Act, assets segregated, is not an issue of timing for us, but one of offering a valuable solution.
Sure. I wonder how long you've had this in the works and what kind of demand were you hearing from? I imagine institutions, as you mentioned, want to hedge their long Bitcoin positions.
Look, we obviously had a great experience with BITO. It was the most successful ETF launch of over $1 billion in a couple of days. We didn't think that was exactly going to happen with BITI, but we know how tricky this space is. You mentioned flows from exchanges to wallets. Part of that is some things we've been finding out lately in the exchange space. Take a look at the largest exchanges, 10Q in May, noting that in the event of bankruptcy, client accounts might not be segregated. The futures market is a place where counterparty risk is measured and regulated by the clearinghouse. And of course, the ETF wrapper itself has segregated assets. And we think that's really an important part of the puzzle, but also as there's been stress in the sort of in many parts of the Bitcoin, I hate that word, but I'll use it, ecosystem, we find that the futures market is maturing quite nicely. So as an example, the futures index has been tracking spot year to date really, really well, which means that those quote unquote roll costs of going from one contract to another have been coming way down, much more consistent with what you would think for a sort of commodity that has no storage costs.
I guess that was my follow-up question, is how do you see this performing? I understand it operates opposite of the S&P SME Bitcoin Futures Index, which gains exposure to BTC through Bitcoin futures contracts. So the opposite of that, you believe, will be closely linked to Bitcoin?
Yeah, that's right. So again, if you look at the long side, the futures index so far year to date is right on spot. So we expect the inverse of that to work equally as well. And the one thing that people should keep in mind is that the way the inverse ETF works, the way BITI works, is that it is rebalanced daily. So that's the inverse -1 of the daily return of that futures index and then rebalance, because you can't really do it any other way, because otherwise you'd wake up in the morning and you wouldn't know what the exposure was. So those are the things to keep in mind. Futures likely to track spot really, really well, and that -1 delivered in all likelihood on a quite effective daily basis.
Simeon, I'm wondering if you could share with us your outlook on Bitcoin. And you mentioned Coinbase earlier. I assume you were referring to Coinbase, a crypto exchange that had to file and mention that if they were to go bankrupt, their creditors may be on the bottom of the list of getting their money back. But are there other catalysts that could make Bitcoin drop further? I mean, stablecoin Tether on depegging has been mentioned as a possible occurrence. But I wonder what your outlook is.
So you'll find us to be the tool folks. So that means we're not going to do a lot of forecasting per se. What I would say, though, is, again, back in the context of us launching this short Bitcoin strategy ETF, let's just take a sort of pedestrian example. we have an inverse S&P 500 fund. Nobody would argue against the notion that the S&P 500 is likely to go up over long periods of time really consistently. I mean, one of the greatest sources of wealth creation in all of modern finance history. But of course, even the S&P 500 is volatile and can retreat, and there are hedging opportunities there. And we think similarly in Bitcoin, having BITO on the long side and BITI will give folks the opportunity to adjust their portfolio holdings accordingly. One of the ways you might use it is, as an example, you might like some of the Bitcoin related equities out there, and you might say to yourself, well, let me segregate my exposure to those companies from the performance of Bitcoin itself. Well, now I can short Bitcoin, but I could be long some companies that do Bitcoin stuff. That's a classic kind of hedge fundy kind of thing, which we're happy to democratize and offer solutions for.
Just wanted to gauge you on one last thing, but in terms of crypto, do you think we're in a crypto winter right now? How long do you see this downturn playing out?
Again, we're not the folks who are going to call the top or the bottom or the middle. There's no question that with rising rates from coming from the central bank and, of course, quantitative tightening, even increasing interest rates on the longer end, that any risk asset is going to have some challenges. But that does not necessarily mean that the longer term value proposition from any cryptocurrency, including Bitcoin, whether it's as a digital gold or a diversifier or an exchange of value, I don't think that in the last few months you can conclude anything about that value proposition. I think
one indicator could possibly be, the demand of BD or BITI. Have you seen the data of like how much volume you've seen being put into shorting Bitcoin on the first day of performance?
It's trading quite well. Today's its first day trading, and the volume's pretty strong. To the extent that that's a sentiment indicator, I think for today, it would be tough to derive a sentiment indicator from it, because from our perspective, there was so much of an untapped demand for a efficient way to short Bitcoin that to divine a sentiment indicator from today is a little tricky. As the trading becomes more entrenched, if you will, between the long and the short side, maybe we could see some sentiment indicators. But for today, we think the strong trading is most importantly a proof point for the legacy shortcomings of other ways to get short exposure to Bitcoin.